Hello, good morning from a bright but rather chilly Thursday the 17th. I'm FX Blue and this is the market brief. So the MPC have their moment in the spotlight today. They are expected to raise interest rates for the third consecutive month. Fun fact, last time rates were at 1% was back in 2009, February 09, when they were dealing with the financial crisis after the credit crunch. But here we are. And the bank is serious about bringing inflation back under control. But is that even possible with all the issues faced by the economy? The quite frankly ridiculous rise in energy prices, that will need to be considered today, because don't forget, gas prices had gone up 400% even before Russia invaded Ukraine. And yes, the oil price rise could be considered temporary unless the war in Ukraine drags out a lot longer. But nevertheless, Sunak is still being pressed to cut VAT on fuel or introduce a windfall tax on oil company profits, or both. How about that, Rishi? A bit of double bubble. Lovely jubbly. Even if he steps up and acts like a hero, though, the country still faces higher national insurance payments and higher bills when the energy price cap is raised. So supplying aid to help us all pay the higher prices elsewhere be a little counterproductive. But this is politics, so we can always expect a bit of smoke and mirrors. What else is there to play for? In the markets, support for sterling has been building ahead of the rate decision. We reached 131.55 against the dollar, and we open around 119.35 against the euro. Over in the US, the Fed raised rates by 25 basis points. The vote was unanimous. Powell predicted that inflation would begin to fall in the second half of the year, assuring the market that the Fed is prepared for every eventuality. Of course they are, just like when they were well prepared for inflation to rise almost out of control before voting for a rate hike. Who knows, maybe it's a big conspiracy to inflate away their debt mountain. There is a danger that higher inflation becomes entrenched, but that's not a core belief of the Fed members at the moment. However, be aware, those are the same Fed members who were convinced that inflation was transitory only last summer, and they thought it may pass without the need for policy change. Yet here we are with a 25 basis point rate hike. Nevertheless, this signals the end of easy money, which started around the time of the financial crisis. Fun fact for investment-backed startups, as the rates rise further, it may get harder for your next round of investment. So maybe a little less table tennis breakout or beanbag chill out, and maybe a bit more hard graft, yeah? Mentoring. Right there, folks. All part of the service. In the market, there wasn't a strong reaction from the rate decision in the US. There had been plenty of forward guidance after all. The dollar index pulled back a little when 0.5% was not realised. We fell to 98.30 there. Euro dollar opens back over 110 this morning. We're trading about 110.25 on that one. Great, have a nice day today. Enjoy the sunshine if you can. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.